Hey everybody, Economic Ninja here, how you doing? Let's do that over again. Hey everybody, Economic Ninja here. I hope you're doing great. We're gonna talk about lumber. I haven't talked about lumber in a long time. If you're new to the channel actually really exploded back 2 springs ago. Not this last spring, but the spring before that, when lumber was just on a parabolic rise, and I made a couple of videos talking about, don't worry, lumber is gonna crash. I actually gave a date range between July and August, and the reason why I said it was because inflation was gonna start picking up in fuel and in food costs, and people weren't gonna they weren't gonna care about the price of lumber or building homes and all that stuff, and we were able to nail it, and a lot of people jumped on the channel and started following. I did another update in December, beginning of December, saying that lumber was going to crash, gave my reasons why, and it did. And now we're going to talk about something totally different. It's the lumber price, but how it correlates to the real estate market. And at the end of a cycle, when you have a boom and a bust, where you have your leftover traders, I'm going to call them the bottom dwellers, the ones that missed the boat in the first initial run up in the price, and then the subsequent crash, being able to short it on the way down. And now they're left, and this is what's happening between algo traders or possibly retail traders as well. And I'm going to link the story below. It's entitled "Lumber Prices Surge 7% as Mortgage Rates Fall for the First Time in 4 Weeks." Now, just so you guys know, this video is about this article is about 4 or 5 days old, but it's not about getting this news to you like right now, because we don't need to trade off of this. This is just fear and greed playing in right now. But what we want to talk about is the emotional dynamics of how markets can go up and go down, and what happens at the trailing end, okay, as this thing's crashing. All right, so a couple of points. Lumber prices surged more than 7% on Thursday as mortgage rates fell for the first time in 4 weeks. Now, as of the recording of this, mortgage rates are still lower, right? But not much. Who cares? I mean, when we hit over 5% with the already high home prices around the nation, really was another 0.5% going to matter, or a full point? No. I mean, at 5%, things are getting nutty as far as how much borrowing costs are, right? So it's interesting that lumber is surging right now because mortgage rates are down a little bit, all right? And that's the point we're going to talk about. It says here the popular 30-year fixed mortgage rate fell 11 basis points to an average of 5.7% over the past week, according to Freddie Mac. And also said a continued decline in mortgage rates could help revitalize the housing market and stimulate demand for lumber. Okay, that line shouldn't even be in the story. I'm going to be honest with you. Let's read this again. It blows my mind, and you have to realize too, the people that write these articles are trying to stay up with the trends, whatever is trending as far as keywords and stuff, so that they can sell advertising dollars and all that kind of stuff. These are people that wrote these stories. They're always looking at like the rosy side. They're trying to get people hooked to read their stories, and they probably were never even invested in the real estate market now, let alone back in the last crash, okay, Great Recession time. So I'll just read it again. A continued decline in mortgage prices could help revitalize the housing market and stimulate demand for lumber. If this author understood the dynamics of interest rates and how the Fed funds rate plays into the 10-year bond, they would know that that is absolutely not going to happen. All right. The Federal Reserve has said we're going to get on top of inflation. I'm going to be honest with you. They're not going to, because they don't have the cojones to do what they need to do. And that's raise rates, the Fed funds rate, above the real rate of inflation, not even the CPI. OK, real rate of inflation that would squash inflation. And you're seeing it already. Their little bit that they're doing, the little bit, has already caused the mortgage rates to skyrocket. That has caused all kinds of other markets the mortgage rate skyrocket, which brings real estate down, right? You're seeing it crushing the stock market right now in returns. It's doing its job, but it's not doing enough. They're just teasing, because they know if they really try for it, we're gonna have a total complete market collapse. And what they're doing is they're trying to get the market to collapse slowly. So that line right here, a continued decline in mortgage rates could help revitalize the housing market and stimulate demand for lumber. I know I keep repeating it, but it's important. That's not going to happen. All right. Now, this is what I want to talk about. I'm going to link the story below so you guys can read it. What is happening right now is every day you are seeing the stock market, or the futures market especially, in lumber being played up and down based on what they think is going to happen with the housing market. All right. The housing market has started its decline. It has made its parabolic move. It was going up steadily up until what, about a year and a half ago, and then it made its parabolic move. And that's when I called the top of the housing market last July. The reason why is because the top of a market has nothing to do with price. It has to do with investor sentiment and the ability for an investor to be able to buy something and hold on to it and make money from it. And that's a healthy market. Like when I talk about how interest rates, a good solid interest rate is around 7%, 7 to 9%. And the reason why that's a good interest rate normally in normal markets, because that encourages savings, because that's usually right below the real rate of inflation, or it's at the real rate of inflation. So it encourages savings, right? Well, the same thing is true with what's going on with the mortgage rates. But what you're seeing is this jostling up and down of lumber futures. Now, a lot of you might say, Ninja, why are we talking about lumber now? I mean, we've got bigger problems with gasoline and food. Well, let me tell you why. In these small little ups and downs, we have them in all markets, real estate, but it's really prevalent in stock markets, right? In stocks, indices, where if you're going up, you have ups and downs, right? Then on the way down, you have these as well too. But they're usually more pronounced because in a bear market, when things start to crash, they really start to come down and come up, right? You have these big slam downs, these people are fearful, and then you got some value investors trying to buy it up. It's usually referred to as a dead cat bounce, and then it continues down lower, right? Well, with lumber, it's very interesting because you're going to see the media try and spin this any which way they can, especially the Fed. They're going to try and spin this as well. And the reason why is because homeownership is the largest, wealth. It's your greatest illusion of wealth, right? And I say illusion because, yeah, you have a house. I know I was talking to a gentleman the other day and he says, man, I got $1 million house. And he's very good with money. And he says, he just laughs and he goes, too bad I can't use it because I need a place to live. What are you going to do? Borrow against it? And then you got to pay that. And this gentleman has his house paid off cash. Like, oh, sweet, I got $1 million. Doesn't do me any good. Yeah, I still need to live somewhere, right? But most people don't look at it like that. Very few people look at it like, 99% of people look at it as a big piggy bank. And the Federal Reserve knows that. And so what's going to happen is the media is always trying to play it between lumber prices or a resurgence in home values. The housing market may be picking up some steam again. The lumber is going up because there's a demand for it, because people are buying houses. That's not true. But the media knows that this plays on the emotions of most human beings because that is their greatest form of wealth. Right there is real estate, even though, and they use it as a piggy bank. That's what's sad. Right now, it's happening right now. I'm going to be doing a video, I don't know when it's coming out, about home equity lines and what not to use them for. But that's usually what people use them for, is a piggy bank or their investment money. And then they end up ultimately losing that investment money because the value of the house goes down, the loans are called back, and then we have a recession and usually a housing decline, a market decline. And this happens all the time, literally every 7 to 10 years. But we're just in the mother of all bubbles right now. We're in a 100-year cycle. This is a big one. So I wanted to share that with you. And I'm going to be honest with you. A lot of people are going, well, what about your predictions for lumber? Long term, over the next couple of years, I believe lumber is going to crash. I really do. Now, I wouldn't use that as trading advice. I'm not a financial advisor. I'm just a dude with a bro hawk and a dream. Don't listen to me. I mean, come on. I got notes on cardboard. Look it. I'm already ready for the next video. Got notes. I promise. There's stuff there. See, written. Point being is this. Over the next couple of years, I think we're going to see a decline in lumber because real estate is going to decline. Also on top of that, and the only way you could really see lumber prices jack up, if all of a sudden you started seeing lumber yards burning down, or you saw, added tariffs being put on like Canadian softwoods, things like that, right? We've seen that before. You could see that, and in the short term, you can see these little spikes, right, going up. But on the longer term, why are you going to need real estate or lumber if real estate's in a downturn because everybody's losing their money to inflation? All right, guys, that being said, I hope you got something out of this. The Economic Ninja is out.